your screens, as you can see, that is Apple's first store in India, in the city of Mumbai. Remember that this particular store has opened in Geo World Drive Mall in a BKC area in Mumbai. And as you can see, that's all of the crowds waiting. About 200 odd people were waiting to actually enter the store, and the store has now opened for public. 11 a.m. is the time when the store will be opening for public. And as we know, the Tim Cook is also here to open the first retail store of Apple in India. We also have the other store opening in Delhi on the 20th of April. But as of today, you can see their crowd gathered. People have come from different parts of India to catch a glimpse of Tim Cook, who is all set there. You can see on your screen Tim Cook, who is there to inaugurate the 28,000 square feet store today. And at 11 a.m. is when the door is set to open for the crowd. And there you can see Tim Cook entering the first retail store in India of Apple. With Tim Cook, who is in India at the opening of Apple's first retail store in the city of Mumbai. And this is in the BKC area, and you could hear the crowd cheering as well, BKC, because that's where the first retail store of Apple is located. It is at Geo World Drive Mall. It is about 2,600 square feet, square meters. That's the store area. And as you can see, Tim Cook posing with all the crowds for a selfie right now. And it is a big event. You will have the second store opening in the city of Delhi, and that is set to open on April 20th. For now, you know that fans were actually lining up right since 8 a.m. In order to get a glimpse of the store, to go in the first retail store of Apple in the country of India, especially in the city of Mumbai.
Show me, yeah, show me.
Okay, so that was indeed an historic launch that's happening in India. We'll be tracking all the news of the Apple's historic launch of their first retail store in Mumbai. But let's come back to the markets and let's come back to the show. And all of our viewers, welcome to the Buy Now Sell Now. I'm Shrishti Sharma, and with me Cheryl D'Souza, and this is the show where we get all your stock related queries answered by the experts. But first, let's have a look at what the markets are up to. So Cheryl, it's almost 11 a.m. and what we are seeing is that the markets didn't manage to hold on to the opening tick, and Nifty is now drifting down around 23 points, while Bank Nifty is still outperforming with gains of around over 150 points.
Yes, absolutely, Shrishti. A very good morning to you. And yes, the way how the fans are lining up in the at Apple Store, you can't see that happening in the markets, because no doubt we started on a very positive footing. From there on, we've only drifted lower. Right now, we are tad bit off the day's lowest points. Reliance Industries, that's the one that's actually dragging the Nifty at this point in time. At one point in time, you had Reliance Industry that was down about 1.5% from the day's highest point. Right now, also, as you can see, it's under pressure, 1.4% downtick coming in for Reliance Industry. Tech Mahindra also is adding is a pain point in today's trading session as well. Take a look at what Tech Mahindra is doing, 1% downtick. Apollo Hospitals is the top loser on the Nifty, along with Bajaj Auto as well as Titan and Adani Enterprises. But on the flip side, today you have HCL Tech making a very smart comeback, 1.7% uptick coming in for HCL Tech. You have IndusInd Bank, Dr. Reddy's, Nestle are among the top gainers as we speak. Let me take a look at the sectoral indices and what are the sectoral indices doing at this juncture. Is the realty index that is the top gainer on the sectoral indices front, 1.2% uptick coming in for realty index, and we will dwell in much deeper into the realty index to understand what are the key triggers for the sector in our BNS and Lens segment. Apart from that, if you look at the broader markets, outperforming the benchmark indices with gains of about 0.4%. And on the flip side, you have energy index that is the top loser, 0.5% downtick coming in for the energy index. So that's the way how the markets are looking like. But Shrishti, like I mentioned, realty index, that's the one that's the top sectoral gainer, and that's in focus on a BNS and Lens segment.
Well, yes, absolutely. And all these real estate stocks, Cheryl, have been on the tear after we saw a rate pause happening by the RBI. And since then, what the kind of business updates we got, all of these companies, was definitely the cherry on the cake. And look at the move in all of these real estate counters. So FY23 is gone with a positive business updates. But what about FY24? Vamakshi is joining us with all those details. What are brokerages highlighting onto the outlook for FY24? Tell us more, Vamakshi.
Well, absolutely. Real estate counters are in focus today, and in fact have been in focus over the last few days. Now let's pick up some of the important trends that have played out for this sector. First up are the sales numbers that were disclosed by most of these companies. Now we're seeing a very strong uptick coming in terms of sales. The companies have posted a very strong operational update, and most of these sales have come in at a record high on an annual basis as well as a quarterly basis. Look at Ajmera Realty, they're seeing an uptick of 93% on a year-on-year basis, followed by Godrej Properties growing by nearly 56% on a year-on-year basis as far as sales are concerned. Soba Macrotech posting good growth of 34% on a year-on-year basis. So largely, when we look at all these listed real estate players, Macrotech and Godrej Properties have managed to achieve their full-year pre-sales guidance. In fact, they've surpassed their pre-sales guidance for the entire year. And in fact, we do have Investec expecting that Oberoi Realty is expected to achieve its guidance, while Suntech is expected to miss its guidance. So those were the overall sales, but how are its sub-segments performing? That is something that is important to look at. When we look at the top half of the pyramid, that is doing much better, and while the bottom is languishing. Higher interest rates have disproportionately affected affordable housing segment, and in fact we're seeing that on account of higher mortgages, that segment has seen a decline in terms of the share of sales from 42% that in the first quarter of calendar year last year to around 31% currently. Apart from that, we're seeing that nevertheless the demand for the upper and middle housing segments has remained relatively resilient. In fact, their share of sales have also gone up, as you can see, for houses between 50 lakh to 1 crore and the houses that are valued over 1 crore. Apart from that, there are some other trends that are also playing out in the real estate markets. Now, definitely in the near term, due to the Union Budget amendment that drove the sales for luxury in the fourth quarter, but this could be marginally negative for the luxury segment from FY24 onwards. We're also seeing that the heightened demand over the past few quarters depleted the stock of older inventory in system, and as a result the prices have continued to grow across micro market, and this in fact this quarter marks the 5th consecutive quarter of year-on-year growth as far as prices are concerned. But the launches are also not quite behind. Residential launches are 1.5 times the pre-COVID averages. The quarterly sales have remained broadly flat across major markets, as well as sales have not declined despite a rise in interest rates except in the NCR region, and definitely the pause that has come in on the repo rate is a welcome respite for home buyers. So largely these were all the important trends that are playing out for real estate players as of now.
Thank you so much for that, Vamakshi, for actually outlining what's working in favor for these real estate names. But let's bring on board our guest for today. We have Kunal Bothra as well as Sharmila Joshi joining us on the show today, and let's get their take and analysis on the real estate space. Very good morning to you, Kunal, as well as Sharmila. Thank you so much for joining us on ET now. And Sharmila, over to you first. You have Vamakshi, who would actually outline what seemed to be a great trigger coming in for the real estate sector. Today, we have seen the real estate sector actually be the top sectoral performer. But do you concur with the views that there are a lot of positives in work for the real estate sector, more scope for an up move? Or do you think that after the 2-year rally that this particular sector has seen in terms of growth in sales, it is tend to pause now?
Well, honestly, I'm a little conflicted because the data is also sort of giving mixed views. So, on the one hand, we just saw the data that there could be, some segments where the whole story, if you remember a couple of years back, was to do with tier 2, tier 3 towns and what kind of growth that they saw in housing. And the pandemic sort of contributed to it because a lot of people were staying at home, so they did require larger homes, etc. Now we have that the data there is not so positive. Again, we are seeing a lot of firing happening across the IT sector, which was one of the big sort of contributors towards young families buying homes. So that seems to be on a bit of a slowdown. On the other hand, we hear data that premium properties, which have been launched by DLF, etc., get sold out in the pre-sales there are so strong, they get sold out in a matter of hours, so to speak. So there's a huge sort of dichotomy in my mind, and which is why I'm sort of neutral on the sector. Yes, I think pre-sales for a lot of companies, as you all have outlined, do look good. I do like some of the stocks at these levels, but I would really wait to see how the quarterly numbers play out and how this overall trend that we've seen in lower hiring and a lot of layoffs, etc., how that really translates into numbers going ahead before I take a call.
So Sharmila is still in a wait and watch mode right now and neutral on the sector as of now. But Kunal, coming to you, all of these counters, especially from the large cap space, have shown a move of over 10%. That's minimum 10% over the past 1 month. On the charts, how are you looking at any stock that you find is still attractive at this levels? Because I guess DLF was one of the counters that was on your radar, right?
Absolutely, Srishti. So, good morning, first of all, to everyone. My sense is that this real estate index is just given a fresh breakout. Now, remember that it's a high beta pocket, high beta space. And when a high beta pocket or as well as a sector moves in such a kind of a strong fashion that in a matter of a couple of days or in a matter of 1 or 2 weeks, when the index gets into a breakout mode, we see a very strong reversal. Now, there are two patterns which are very, very important for the real estate index. So, as you can see, the first one is a bullish, formation of an inverted head and shoulder pattern. And this time it's not on the price, but it's on the indicator, which is all the more strong for, the real estate index as such, and looks attractive for the prospects for the index over the near term. My expectation is that at least a 10% of a further rise could be seen into the real estate index, and that could trickle into maybe a 10 to 15% rally into the individual stocks. And the other pattern is the bullish RSI divergence, which is also being spotted on the daily time frame for the real estate index. That when you try and compare with the larger cap performers, the likes of DLF, Realty, Sofa, etc., Anantraj has been the other favorite, which I have been highlighting time and again. So I think these are the few candidates which one can still bet upon. Out of the few names, the two names which I would still continue to be bullish on would be DLF as well as Anantraj Industries. I would advise a buy on dip strategy for both of these stocks from the real estate pack.
Okay, so at least 10% upside is what Kunal is looking at from the Nifty Realty, as well as he's liking DLF as well as Anantraj at this point in time. But with this, viewers, it's time to slip into a short break. But as we come right back, we'll be taking all your stock-related queries, so stay tuned.
Welcome back. You're watching Buy Now Sell Now on ET Now. If you can see on your screen, you have the benchmark indices that are under a tad bit of pressure, but it's the broader markets and Nifty Bank They're actually outperforming the benchmark indices in today's trading session. This is the show where we get you answers for all of your stock-related queries. We are live on Twitter as well as Facebook. You can write to us on those platforms, or also you can write to us on the WhatsApp number that's flashing on the top of your screen. Do mention your name, the stock that you're looking to invest in. And if you already are invested, then mention your buy price as well as the quantity and the time horizon. That will help our experts help you better. And talking about our experts, today we have Kunal Bothra as well as Sharmila Joshi on the show. And Sharmila, before I read and ask you the first query then, talking about what should retail investors do to make sure that their wealth is protected. We've entered the earnings season. We're likely to see a lot of volatile in individual names.
Yes, and I think the earnings season hasn't been the best because, honestly, with IT, there were a lot of concerns even before we went into the earnings season. But, to sort of hear it directly from the management, yes, that there is, that they are seeing that slowdown, not just in the BFSI space, but across their verticals, and that they have seen people actually holding back on confirming orders is a little concerning. So I think this is not an easy situation. I'm sure that they find themselves in, and we must allow for 3 or 4 months for that whole interest rate cycle, etc., to peak out, and then get a sense that it's actually peaked out, and then really get positive on the sector stocks from there on, because things are still pretty much in a flux. So I think the short point is that the way things are, it might be, and since we are now really in the earnings season, so to speak, it might be a better idea to just wait, have your list ready, but wait for numbers, see how things are going, and then take a call from there. I think the two important sectors to watch out for the earnings season would be IT and banking for very different reasons. Banking has gotten off to an okay sort of start with HDFC Bank, and ICICI Bank will now follow over the weekend. I think over the weekend we will get numbers of quite a few large caps, and then really let's take it from there. I'm not in any hurry to buy. I'm not negative on the market, but at the same time, I'm not in a hurry to buy any.
Okay, not in a hurry to buy at this point in time, but really looking at and closely tracking the results from the IT as well as banking space. But viewers, let's move on and kickstart taking all your stock-related queries onto the show. And the first question that I have is coming from Dhananjay. And Kunal, is looking for a technical view on PNB Bank as well as Prince Pipes for the next 2 months. He didn't share his entry price, so viewers, it's advisable that you share the entry price so that we can guide you better. But Kunal, purely on the charts, PNB Bank and Prince Pipes, how are they looking to you, and the expected move from here on?
Both are attractive. PNB Bank as well as Prince Pipes, both of them are attractive in terms of charts. PNB specifically, after that steep rally in end of 2022 and the 3 months of subsequent correction, I think now the risk reward seems to be very attractive for PNB to be entering at current levels. So in case if you already have position, you can look to deliberate to even add positions at current levels of sub 50 where the stock is trading right now. Same would be the case with Prince Pipe, the stock which has slightly inconsistent volumes. I would not say illiquid, then a bit of an inconsistent volumes, but the chart patterns are a bit more attractive for Prince Pipes as well. The stock has been stagnating into a consolidation, so 550 to 620 is a range for Prince Pipes. The stock is trading almost at the midpoint of this range for itself, so it looks attractive, both of them. PNB specifically is what I would suggest to accumulate or even add further at current levels.
All right, this one is coming from Kabir Bedi from Punjab, and this one is for you, Sharmila. He's already picked up 600 shares of Apollo Tyres at 326 rupees per share, and in fact, he purchased this counter this morning itself. But on the longer term, he wants to know, how does Apollo Tyres look to you? Does it make sense to stay put with this one for the longer term, given that he's already invested in this one now?
Well, the results last quarter at least didn't look particularly good. But yes, I think if you are a longer term investor, you can stay invested in it with a target around 360. I think what is important in this space, not just tires, but I think auto ancillaries as a whole, is that passenger vehicles, the sales numbers as well as commercial vehicles numbers have been fairly good. And as we sort of see the semiconductor issue get sorted out, they will be sort of a faster, the order backlogs will get cleared, and things will, slowly start falling in place as far as delivery schedules are concerned. And I think that will be a good that will have its own good effect on a lot of the ancillary companies, because while the numbers for the companies look good, if you are not actually going to be in a position to roll out your cars, you do have a sort of a bit of a dampener. So I think going forward, I would be more positive on the sector than I've been. So as I said, my target would be closer to 350.
For the next question, Sharmila, let me come to you. The question is from Gauri Gupta and she's holding two counters. Firstly, Sequence Scientific from a price of 190 rupees and the other one is MSTC in her portfolio from a price of 430 rupees, having a loss of over 50% in both of these counters. So what's your advice? Should he continue to hold on, or she's rather looking to make a switch into stocks like Infosys or Poonawalla Fincorp for some recovery? So what's your view on that as well?
So the first stock is Scientific. I think there you can continue to hold on. I think this would be a wrong price to exit the stock. It's not that I'm very positive on the stock at this point in time, but I think that you could possibly see levels of closer to 80, 82. So I think you can hold on to that. I'm afraid I missed the name of the other stock.
80 rupees. The other one is MSTC. She entered at a price of 430 rupees.
That I think you can. I don't actually very closely track it, and to my mind, I think she mentioned Poonawalla Fincorp. I think that looks better. They had shared an update, I think, in April, at the start of April, and those numbers look good in terms of their disbursements and the way their gross NPAs and NPAs stood year on year, quarter on quarter. Both those numbers look good. Also, it's a very focused company, and ever since the Poonawalla group took it over, they have been delivering very well on a lot of parameters. So yes, possibly you could shift to move to Poonawalla from MSTC. Infosys again, I would avoid for now. I think give it a couple of months, give it another quarter before you revisit it.
Okay, this one is from Sanjay. He's writing to us from Telangana. Kunal, he wants to know if he can buy Tata Chemicals at current levels, and also he wants to know why this particular counter is down about 6%. One of the reasons why is because the channel checks have indicated that Tata Chemicals has gone ahead with a price cut. So that's one of the reasons why the stock is reacting like that in today's trading session. But Kunal, on the charts, do you think you can look to buy Tata Chemicals today, given the fact that the stock is seeing a downtick?
Well, I would suggest to refrain from it, because even yesterday when the stock fell below that 9,000 mark, I think 990 approximately is very close yesterday. For a brief period it may have entered into an oversold territory, but today the stock has seen a further correction of another 5 to 6%. So I would suggest to stay away from the stock. Let the volatility settle down, because till the time the selling pressure continues, the stock will not form a bottom for itself. And it's going to be a futile attempt just to try and buy the stock because it's corrected 10% in the last 2 days. So wait out for the point where the volatility settles down, selling stops for the stock price, and that's where there could be opportunities to try and create fresh long. So even if it's like a couple of percentage points higher from current levels, that's absolutely fine, because then the confirmation would be far more stronger than what it is at current levels. So I would suggest to wait out for another maybe a week or so, let the volatility ebb off and let the prices settle into a trading range. Then we can take a call whether to buy the stock or look to just keep it on our radar.
Okay, Kunal, for the next question, Narayan wants to know your view on Everest Kanto cylinders. He's holding the shares from a price of 130 rupees. Now the stock is trading near about 100 odd levels. So he wants to know, is this a good time to average out this counter, and what are the charts suggesting you?
So it looks attractive. In fact, I think most part of the correction for Everest Kanto seems to be over. From 280 levels in 2021, the stock had corrected to sub 70 levels. So it was a very sharp correction of more than 60%, 70% for the stock price. Now it's trying to find its feet back. The good part about the charts for Everest Kanto is on the daily time frame, the stock has broken out of the Ichimoku cloud pattern, which it had not done in the last 1.5 years of this sharp correction. So that itself is an indication of a change of trend for EKC, and I would believe that you should stay put with the stock price, and look to buy back or maybe add few more quantity. Like for example, in case if the stock dips back towards the 1995 zone, that's a good zone where you can look to average further and try to bring your original cost price significantly lower.
All right, so that's the word coming in on Everest Kanto. But on that note, we'll actually a break in this edition of Buy Now Sell Now. When we come back, we'll continue taking all of your stock related queries. So viewers, don't go anywhere.
Welcome back to Buy Now Sell Now, a show where you get all your stock related queries answered by the experts. And continuing the same, the next question that I have is coming from Mathi. And Sharmila, she bought shares of Balaji Amines, 10 shares at a price of 3,800 rupees. Wants to know, is this a good time to average this particular counter? And she can hold this counter for the next 6 months. So what's your outlook on the same?
Yes, I think she can continue to hold what she has. Certainly, the fundamentals seem to warrant a higher price. As far as averaging goes, as we were talking a little while earlier, it might be best to wait for numbers because just as we heard in the case of Tata Chemicals, I think a lot of chemical companies will find themselves in a place where they will now face competition from China, which has now opened up. They did benefit. All these companies benefited from the China plus one factor during the pandemic when a lot of people were looking for a manufacturer, supplier other than China for a whole host of chemicals. Now that picture is turning, so there could be a pressure on the business as well as on prices. So it might be best to wait a little bit, but overall the company and the numbers seem to warrant a hold.
One is coming from Satyan, writing to us from Palakkad, and Kunal, he has 85 shares of Ashok Leyland, which he's already purchased at 163 rupees per share. He's saying he can look to accumulate he's asking whether he can accumulate some more with a time horizon of approximately 2 years. Do you think now is the time you can accumulate, because given the fact that his buy price is also at an elevated level?
Well, yeah, you can look to average at current levels, but then my preference is, that you should ideally look to trade on stocks which have very good, chart structures on long-term basis and which have a tendency of giving consistent returns on on a broader time frame. Now, Ashok Leyland has been a stock which has been a bit more erratic. So, the stock, for example, I think in 2021-22 made a high closer to 170, 175, then it corrected sharply. So broadly, it's been remaining to a range of 100 to 175 for the last 2 to 3 years. And even though the chart patterns may look attractive, I would probably suggest that a better switch from Ashok Leyland would ideally be Tata Motors because of the high beta nature as well as the indication that the stock may get into a breakout mode. The chances that Tata Motors may signal a very strong uptrend could be pretty much high. So the call is on the viewer. If you're looking to just add on to the stock or hold on to Ashok Leyland itself, you can look to add at current levels and then hold patiently from a longer term time frame. But if the similar time frame is given, then I would probably believe that Tata Motors can stand to outperform significantly.
Okay, so Hemant has the similar query on Ashok Leyland. So I guess Hemant, your query is now answered. But moving on to the next question that I have in Sharmila. This one is for you. This question is from Mani from Chennai, and she wants your view on Make Money Organics. Just now you were touching upon the chemicals space. So how is Make Money Organics looking to you right now? Is this a good price to enter in this particular counter?
Once again, I think have it, hold it, and if you don't have it, wait for numbers and then take a call from there. But overall, this looks like a good stock. So let's just wait for the numbers and then take a call.
Samrat, and this one is for you, Sharmila. He's saying that he has 100 shares of HCL Tech, which is purchased at 1,015 rupees per share. Since the entire IT sector looks like it is under pressure, he wants to know what sort of strategy should he adopt when it comes to HCL Tech. HCL Tech actually is a top nifty gainer in today's trading session. It's bucking overall weakness in the IT sector. But what's your take on this particular counter, Sharmila? What should he do?
So first of all, I think there are a couple of big ticket numbers which are expected this weekend. ICICI Bank, Reliance, HCL Tech. So this weekend will be important from HCL Tech's point of view. HCL Tech saw a big correction in December when they already spoke of some of the sort of business headwinds in an sort of a open house that they had, and the stock corrected significantly from there. In the last quarter, if you recall, I think among the companies that reported the best set of numbers in the IT segment, it would be HCL Tech. So it continues to be my favorite within the segment. But as I said, I think that really honestly, the commentary and guidance that Infosys gave does make me want to sort of step back and really sort of evaluate what is happening across the sector, not just the large caps, but even some of the more sort of niche plays which are really catering to just a couple of sectors like, in their commentary, they did speak of headwinds even in the telecom sector, which is why we saw Tech Mahindra correct quite a bit. So I think since it's a stock you already have, you can continue to hold. But I think for averaging, let's just wait this weekend out.
So that's the advice on HCL Tech. Results are waited. But moving on to the next query. Kunal, this question is from Parvinder Singh and he's holding two counters. Firstly is Bharat Forge, 40 shares from a price of 754 rupees at a profit in this particular counter. What's the view for the next 6 months? And the other one is NMDC, 100 shares at a price of 194 rupees at a huge loss in this particular counter. So what's your outlook on the same?
So my outlook would be to buy or average both of these stocks now. Bharat Forge specifically, I think on the weekly chart specifically, the stock has come back towards a very key moving average, 89 exponential moving average, which I believe works exceptionally well for stocks which have already gone to a strong uptrend. So I think in that regard, the risk reward would be in favor to add or enter Bharat Forge even at current levels. NMDC, I understand that the stock has gone through a correction over the last many months, but looking at the way the commodity cycles have shaped up, I think most of these commodity stocks are getting into a zone where they may be very attractive and value buys. Now, you may require a lot of patience over here, but whenever the commodity cycle improves, I would expect NMDC and such other names to try and give you strong returns. So I think it's a matter of that cyclicality which may come back again for the metal pack or the commodity space as such. I would suggest that even NMDC is an attractive buy, so you can look to average at current levels. Bharat Forge, I would be a bit more confident looking at the weekly chart structures for the stock.
So it's coming from Pratiksha, writing to us from Muscat and Kunal. She has Carousel making a profit of approximately 20% on this particular counter. She wants to know whether she should book profits for now. She can hold on for the next 6 months. And if you advise in the next 6 months that she should hold on to it, she wants to know the support and the resistance levels for this one.
So I would suggest to maybe start booking out profits over here. So there's no damage in terms of the chart structure. The charts are very attractive. The only concern is the volumes. So for example, in the month of February, when the move started off for Carousel from 450 levels to 520, 525, the volumes were very much high for the stock price as compared to maybe the last 1 week or the last 1 month, where the stock moved up from 520 levels to now 620 approximately. The volumes are relatively and comparatively less. That's the only concern which I probably spot on the chart price, which means that there could be a hard chance that the stock may correct or consolidate at lower levels. So I think a better strategy is to try and book profits or start to book profits from current levels. Maybe at every 10 rupees to 15 rupees rise, you can keep on booking out maybe 15% to 20% of profits on the stock. On the downside, you can keep a trailing stop loss of 600 for the trade as of now.
Okay, moving on to the next query. And Amila, this question is on a metal counter. Love Sharma is holding 100 shares of SAIL at a price of 99 rupees. What's the target for the next 6 months and should he average at this point?
So it's very difficult to talk of averages for the next 6 months, very honestly. But overall, this is a stock that I like, a space that I like. The valuations are looking quite reasonable for metals as a space. I think once again the concern will be what happens from in China and what is the kind of pricing that you see for metals globally. Because if there is one sector that sort of completely reflects prices globally, then it's metals. And we did see very sharp sort of corrections in the space, and then we've seen them go up from there. So my sense is it's not going to go up in a hurry. But it's a stock that I like. So I would ask him to sort of keep his horizon more than 6 months and then wait. I think, you could see targets closer to 100 on this stock.
All right, let's shift focus then and let's talk about the new listing of the day. And the new listing of the day is Avalon Tech. No doubt that that particular counter is under pressure. 4% downtick coming in for that new listing. But let's bring on board the management for Avalon Tech to understand the way forward for the company now that they are a listed entity. We have Kun Hamid Bicha, who is the chairman and managing director of the company, and Mr. R.M. Subramanian, who is the chief financial officer of Avalon Technologies. A very good morning to both of you gentlemen, and also congratulations for that listing on the bourses. But let me talk about numbers then, because let's talk about your projection for the company, especially on the margin front. As of now, it's been in the lower teens level. Do you see any scope for an improvement in your margins? Also, if you could help us understand what are the key drivers or what will be the key drivers for your margins?
So what you said is true. We are in the teens, and there is scope for improvement in margins, and it's primarily as we go into more and more box build and do more mission critical products as Avalon, both India and in the US, we see good prospect to improve that.
Hello, Mr. Subramaniam. Let me come to you. This is Shrishti joining in. You said that via the IPO, you should be able to bring down the debt by 50%. What will be the debt to equity ratio, and also give us a sense on your working capital cycle?
We are raising about 320 crores as a primary capital through this IPO, and as said in the RHP, about 145 crores of that will be used for debt reduction. So today our net debt is about 300 crores. That should bring down 50% of it, and moving forward we look forward to maintaining a 1:1 debt equity ratio. And also we have funding for working capital. As you know, this is a business where we have working capital intensities. Idea is also to make sure we maintain these working capital lines, and as we move forward our growth is fully funded and we can re-leverage as we move forward. That's the idea, of make sure the growth is fully funded and Avalon is fully prepared to take on the growth momentum what we are seeing in the industry.
Right, your material margins have actually been rising over the last couple of years, and because of the chip cost and container costs going up, have you been able to pass on these costs to your customers? Also, what is your strategy to navigate through all of this?
In terms of material margin, we've been hovering about 34 to 36%, and it's actually increasing, as you rightly said. This is again we are able to maintain the margins in spite of all the component shortage and COVID period where even container cost did go up. That's again a sign of our operational efficiency, and we intend to maintain the same. And wherever we are able to save cost, we should be able to keep that. But there are times where we need to work with the customers, and customers does support us in terms of if the cost does go up, and that's the reason we've been able to maintain the margins, and hopefully moving forward we should maintain the same as well.
Okay, but with this, we'll let you go on that, gentlemen. Thank you so much for joining us today on ET Now and helping with our viewers the outlook on the company's performance going ahead. But with this, viewers, it's time once again to slip into a short break. But don't go anywhere. As we come right back, we'll keep taking all your stock-related queries. So stay tuned.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries. And this one has come from Neha. She's writing to us from Mumbai, and she wants to know about Delta Corp. Kunal, this query is for you. She's asking about Delta Corp. Why such a sudden fall? She's been holding this counter for the last 6 months, and she's saying that she has 2,340 shares. She bought them at a price of around 200 odd rupees. Right now, you can see the stock is trading at around 192. She wants to know what's the future looking like for this particular counter, because at one point in time the stock was trading upwards of 316 odd rupees. No doubt Delta Corp, a lot of news flows also on the taxation front, on the GST front, actually impacted the stock price. But on the charts, how does Delta Corp look to you?
Well, it does look attractive. I think so. Generally, what happens is when a stock goes into a correction, we tend to find the stock a bit more attractive, but that's not the case with Delta Corp charts. In fact, when the stock has corrected from 325 levels to 175 first in June, July 2022, from there on the charts have just deteriorated. There was a bounce in between for Delta Corp, but post that the stock has come back towards the retest of that 175 mark. So my sense is that the stock still looks a bit more weak in terms of charts. There is no indication that a term or a medium term bottom is in place. If you bought at higher levels, I think at best you can just keep a trailing stop loss maybe at 175 or 180 depending on your comfort zone, and look to exit the stock in case the stock reaches those key support zones.
Okay, moving on, and Kunal, the next question is from Karthik, and he's looking to invest into NTPC, or rather buy NTPC futures, one lot. Is this a good time to buy since the stock has corrected almost 4% in the week gone by and seeing a sharp upsurge? What's your view?
See, I would not advise to buy NTPC a lot at current levels. So the ideal way to look out for stocks whenever you're looking to buy is that not to look out for stocks which are weak in terms of the charts. So if in the best of the markets, there are few stocks which show weakness in terms of charts, that should not be the first preferred name of stocks which you should be looking to buy. You should be ideally looking out for stocks which are strong in terms of momentum and which can withstand the momentum on the upside even when the markets are a bit more volatile. So I would suggest not to look out for buying these names. Few alternatives which I can suggest from a technical standpoint, which looks attractive. Something like, for example, AB Capital looks attractive at current levels, even though the lot size is a bit bigger for the stock price. Biocon at 230 levels in terms of futures looks attractive. And from an options trading perspective, IDFC Limited, maybe a 85 call option could be a good bet at current levels.
This one is coming from Abhimanyu Kohli. He's writing to us from New Delhi and he wants to know whether it makes sense to buy Asian Paints and Tech Mahindra at current market price. He's intending to hold this for a couple of years. So let me take this to you, Sharmila. The fact that Abhimanyu is looking to buy these counters for at least medium to long term perspective, do you think now is the right time to buy, given the fact that Asian Paints has done absolutely nothing and Tech Mahindra of late has seen a downward drift?
I think with Asian Paints, the concern was that their the valuation that they bought was far higher than what their peer set was getting, and around that time you had news that new players were entering into the field. So there was this perceived sense that competition could sort of dent their numbers and things wouldn't look so good for them going ahead. And we've seen the stock, as you said, underperform over the last year. Having said that, I think it's a great stock. You could buy it at current levels, and especially since you're looking at a couple of years sort of an horizon, definitely you could buy Asian Paints. Tech Mahindra, again, I think a good point to enter the stock. But my caveat here would be, given the way TCS and Infosys has played out, wait for the numbers and take a call on what price to buy. But other than that, I'm comfortable with the idea of buying both stocks and holding them for a couple.
Okay, Sharmila, once again coming to you for another large cap name. Suraj is holding 200 shares of ITC that is at all-time high levels yesterday, but he entered at a price of 359 rupees. He wants your outlook for the next 1 to 2 years, and should he add more at this point in time or rather wait for a dip?
So, now we have ITC at its highest ever level, and we've also seen it being an underperformer for the longest time, and the kind of the memes that you used to see on social media for ITC. But having said all that, personally, if you ask me, I hold the stock, and if you, it's given me fantastic returns. Of course, I've been holding on to the stock for a fair number of years, and I'm not in a hurry to sell it. So I think that explains my overall sort of outlook on the stock. But would I rush to buy at 400? I think wait a bit, because you have seen some kind of buying in a sort of a market that was not really going anywhere, and you've seen the stock go to its highest ever level. Allow it to cool off a little and then buy, especially since you're a longer term investor. But yes, I think even if you bought it at 400, I do think that there is a side even from current level.
This one is coming from Anjali. She's a senior citizen. And Kunal, she's asking about Reliance Industries, 40 shares at a price of 2,440 rupees per share. She wants to know whether she can look to average it right now.
Well, I think Reliance is a buy as well as a hold at current levels. The stock has gone through a lot of ups and downs in terms of price momentum. But then surprisingly, 2,200, 2,300 has been a very strong range of support for Reliance Industries. So I think at 2,330 levels where the stock is trading right now, it's a zone where you can look to add further. And Reliance is also a stock which you should look to be a bit more opportunistic with. So in case if the stock happens to drop back, say 10% broadly from your cost price, that should be taken as a classical entry point for Reliance Industries. It's a stock which gives you compounding returns on a longer term basis. Don't expect quicker returns like we generally expect for high beta stocks. So Reliance is something which you should hold on from long term perspective. I think a 10% dip from an average cost price should be a good level to average.
Sharmila, what's your view on CAMS? Anand is holding 210 shares from a price of 2,675 rupees. Now, since he's at loss, he wants to know, is this a good time to average or he continue to hold on? He can stay invested for the next 1 year.
Stay invested. Don't be in a hurry to add, because I think the kind of data that we are seeing. Since this is a company that sort of caters to new IPOs, mutual funds, etc., and we are seeing that slowdown from the retail side of investors. Maybe you could see some impact on their earnings. So let's wait and see how that plays out. But overall, my sense is that these are, if you are a long-term investor, these are the good businesses to be entered in, because in terms of the size of our population and what is invested in the equity markets and mutual funds, we still have a long way to go. So, from that perspective, I'm very, very positive. But, just in the near term, there could be concerns. So wait and see how the numbers, etc., play out. But for now, I think definitely stay in.
All right, with that, let's kick start with the rapid fire then. The first one coming your way, Kunal, it's on Time Techno Plus from SK Saran. 1,000 shares holding from the levels of 78 rupees per share. He wants to add more. At what price?
So I would suggest to hold on to the quantity as of now, and if you look to average, maybe 80 could be a good level to average.
Okay, Sharmila, Dr. Shyam is holding shares of Midhani, 150 shares at a price of 225 rupees at a mild loss right now. What to do next?
This is, I'm stock.
Midhani, from a price of
No,
225.
sorry, I don't track it.
Okay, Kunal, anything on the charts you can say?
Well, looks quite okay on the charts. I would suggest to just hold on to the stock as of now. Keep 175 as a stop loss.
Okay, Kunal, this one is coming in from Anjali. Lupin futures at current levels doesn't make sense to buy.
Yeah, look attractive. Both Lupin as well as if possible Biocon, both of them look attractive to the chart.
Okay, Kunal, Vinay is holding shares of BHEL, 5,000 shares at a price of 51 rupees. Should he book profits or hold?
I think you should look to hold on. There should be much more upside for the stock over the medium to long.
Okay, Kunal, Sudha wants to buy 3 to 4 stocks, but since it's rapid fire, we'll ask you one. Does it make sense to buy Bharat Dynamics right now or at what price?
Yeah, I think, buying on dips is what I would advise. Say closer to 885 could be a good level where you can start buying.
Okay, Sharmila, Shailesh is holding shares of Rolex rings, 1900 shares, shares at a price of 1900. What's your view on this particular counter? Should he continue to hold on?
Yes, I think you can.
Okay, this one is coming from a viewer who's not written the name, but it's on LNT, 775 shares at a price of 1,635 rupees per share, holding for the long term. Wants to know whether it makes sense to book profit right now and buy later, Sharmila?
No, I think stay.
Okay, Sharmila, Mary is holding 100 shares of GHCL at a price of 692 rupees. What to do next and what's the outlook on the same? Should she book loss or continue to hold on?
So I think that's going to be felt across the different companies which GSS also face. Having said that, for the longer term, we will continue to hold.
All right, and with that, we come to the end of the rapid fire as well as query segment. Thank you so much, Kunal, as well as Sharmila, for joining us on the show and taking all of our viewer queries and also giving your views on the real estate space. And with that, viewers, we are totally out of time on this edition of Buy Now, Sell Now. It's a goodbye from Srishti and myself and the team that put the show together. But stay tuned, Markets at Noon coming up next with Anisha and Somit.